All right, can you guys hear me? Good morning, everybody.
Pull me close, slow motion, lose control. Water, stay with me.
Testing. Can you guys hear me pretty good? Thanks for the subscription. Thanks for the subscribe. Welcome. We're going to get started at market open. The game plan is very simple. Lisa subscribed. Hi, baby. Thanks for the subscription. Shout out, my girl. That just made my day. Hey, thanks for the subscribe, Norigi. Appreciate you. Yeah, if you guys haven't subscribed already, go ahead and do so. I will be going live Monday through Thursday, and we're going to make some money. So quick recap on how we're going to be trading. So as soon as the market opens, I'm going to be doing two things. I'm going to be looking for momentum, and I'm going to be looking for a reversion. Basically, this is my prop firm trading strategy. And the way this works is we are going to be finding the fair value of NQ. So when we find that fair value, we're going to be trading around that. So whatever price people deem NASDAQ valuable is where we're going to be trading. All right. So that's what we're going to be doing. So just waiting for the market to open and kind of tell us what we need to do. Also, another thing, if you are trading prop firms, my recommendation is you trade 1 trade per prop account. So I have multiple prop accounts ready to go. So we're going to be trying to catch about 5 to 10 trades in this session, but only take 1 trade per account. So 1 account may win, 1 account may lose, 2 accounts may win, 1 account may lose, and that's how we're going to be trading. Only trade 1 trade per account. So don't copy trade. I know some of you like to copy trade. Do not copy trade across all your accounts. Separate them. The reason for this is because this edge plays out over time. It's okay if you lose one of your prop accounts. It's okay if you blow the evaluation, because what we're trying to do is we're trying to profit from the payout. So you spend $100 on a couple of accounts, you spend $200, $300 on a couple of accounts, you just get one of them to pay you out $2,000. Not only are you getting the money back that you lost, but you're making profit. So remember. All right, so we got 1 minute left. I'm going to set the fair value at wherever this candle closes, and then we're going to watch what the market is doing. All right, we got 15 seconds till the market opens. What up, Dontro? All right, so here's the fair value of NQ. So I want to look for some momentum. All right. I want to see strong momentum, kind of seeing where the market's going right now. So potentially short, maybe. Potentially we're going short. And our take profit stop loss is 25-point stop loss for a 38-point take profit. Just need to wait for this candle to close to kind of give me an idea. I want to see a bigger displacement with no wicks. So let's see how this candle closes. If it closes kind of ugly, we're going to wait. Okay, we're going back bullish, bearish. So it's kind of going back and forth right now. So we're not doing anything as of right now. Kind of want to see what it does. Okay. So we're still kind of waiting. Okay, so we're getting some displacement now. Okay, so it looks... So we're going to probably wait for this candle to close. Oh, and she's wicking. So again, I'm kind of just iffy about it, how it wicks. So let's kind of wait and see how it plays out. All right, so the candle's kind of not really doing anything right now, so we're still waiting, seeing what it does. All right, so she's coming back above, back to the fair value price that we have marked out. So I want to see what it does. I'm looking for some momentum. All right, now we're getting some push. All right, and this candle seems to be a bit bigger. So what we're going to do is we're going to increase the risk. We're going to go for a 50-point stop. 50-point stop. All right, so I'm going to go ahead and short. All right, go ahead and short right now. Okay. All right, take profit's going to be 28,445. All right, so we're just kind of waiting on this. So you have a 50-point stop at 28,571, and we have a 76-point take profit at 28,445. All right, guys, we're in profit. We're in profit. Just want to see how this plays out. All right, guys, we're moving in profits. If you guys want to set stops to break even, you can. But I want to see this trade play out. I'm going to set stops at break even. All right. I just got stopped out at break even. All right. No worries, guys. No worries. All right. So we got stopped at break even. No problem. No harm, no foul. So what I'm looking for now is some reversions back to the fair value. All right, I'm going long, guys. Okay, I'm going long. All right, take profit 28,574. Stop loss 28,511. Looks like it's going to hit TP. Okay, here we go. We're about to smack take profit. Come on. Come on. Come on. Boom. Profit smash. All right, that's 2 accounts. 1 break even, 1 win. Here we go, baby. And this is the game, guys. This is the game. This is the game. Hell yeah. Hell yeah. All right, so now that price is back above the fair value, I'm going to be looking for it to move away from the fair value, and then we're going to be looking for a reversion trade, just like how we just did now. And if you keep trading like this, I promise you this edge plays out and you get payouts. Can you guys hear the music? Is the music too loud or is it just the right amount of volume? Just so I know you guys can hear me pretty good. I like to take about anywhere between 5 to 10 trades, and I stop trading at 11 a.m. So at 11 a.m. Eastern time, we're done. So the strategy, we really only trade for 2 hours. 2 hours and we're done. The goal is to take as many trades as we can on multiple accounts, and I promise you that this edge pays out. The reason why we're playing a 1 to 1.5 risk reward ratio is because most prop firms, their profit target and their stop maximum daily loss is usually 3,000 to 2,000. So that is a 1 to 1.5 risk reward ratio. So this edge overall plays out really well on prop firms. And now we just wait, kind of see what the market gives us right now.
White lights buzzing over the gas station. Submarine six crashing into the glow. You stood there smiling, hands in your pockets, looking like trouble, dressed up as mercy. There you are, looking too innocent.
Yo, what up, David? Good morning, sir.
You make beautiful things feel dangerous.
I'm good, man. So far, we're having a great trading day today. Let's see if we can keep it going. We have one break even and one profit today. So let's see if we can keep it going.
One old message, one wrong word, one small memory cuts too deep.
Now, mind you guys, some of these trades will lose, and that's okay, right? So if you're trading one trade per prop account, you're going to maybe pass. If let's say you have 10 accounts and there's 10 trades, you might pass on 6 of them and lose on 4 of them, and that's okay. You might make profit on 6 of them and lose on 4 of them, and that's okay. The name of the game is to take advantage of how the prop firm mathematics work. If you really think about it, prop firm is all about math, figuring out what percentage of your pass rate, what's your pass rate percentage, and how you can milk these prop firms. And that's exactly what we're going to be doing. So far, no trade. We're just waiting. We have a lot of earnings this week, so be very wary about that. Let's see what we got. We have today, we have Amazon before market open. Obviously, those earnings came out. And then we have Wells Fargo after market close. Tomorrow, we have Bank of America. We have a bunch of others. On Wednesday, we have the tech giants. We got Meta, Microsoft, Alphabet, which is Google, BBVA, which is a bank. Thursday, we have Apple, Amazon, and we got a lot. Yeah, so a lot of earnings this week.
One by one, domino, come undone. Domino, watch me break. Since you
All right, guys. Potential long coming. Potential long. Just wait for this candle to close.
under my skin. Careful footsteps, careful hands. Smile,
All right, I'm going long.
speak to
All right. Here we go. Take profit 28,510.
like glass. Don't hold me,
Stop loss 28,447.
I might break right now. Look at me, still shining, but I'm not what I was.
All right, stop loss hit. All right, go on to a different account now. Use a different account. All good, all good.
Teacup shaking, small heartbeats, tiny pieces, hide so well. Lipsticks,
Gonna be dropping that soon, David.
tears don't. I learned how to stay.
I've been super busy these last 6 months transitioning from my old house to my new house, so we're getting locked back in now. So get ready.
Right now, look at me, still shining, but I'm not what I was.
This trading style is definitely a bit aggressive, so that's how we want it to be. We want this strategy to be aggressive. We want to take as many trades as we can, so that way that our edge plays out over the long term. All right, potentially going long again. All right, I'm going long. Take profit 28,505.
Salt on your shoulders, sunburned cheeks, barefoot run.
Stop loss 28 for 442.
Hair all tangled, wild from the ocean. You crashed into me, still laughing. Look at us now, sun-drunk skin warm.
Okay, we're in profits.
Clock, sun, ocean on us. All day long, you in my arms, where you belong.
Okay, we're approaching TP. All right, TP about to hit. It looks like TP hit. TP about to hit. Come on, babes. Come on, babes. We got about an hour left into the session. All right, guys, next trade. Get your other account ready. Nick Smith, appreciate the subscribe. Thanks for the sub, man. Hey, but we're back. We back, David. All right, so it looks like we're getting some volume to the downside, guys. I think the fair value is going to be here next. So whenever I see volume moving in a direction, I like to change the fair value of the day. So it looks like we're going in a downwards trend. So I'm going to go ahead and change the fair value of this where it kind of consolidated. Thank you, man. So that's the cool thing about this strategy is we like to have a versatile fair value, and we take that with discretion and we look for that next fair value for NQ. So now I'm just going to be looking for a displacement for a mean reversion entry. So we're just going to have to wait. All right, just waiting for a displacement for a long, guys. All right, I'm going long.
Order filled.
All right, we're out. And that's the game, guys. Keep the ball rolling.
Silver on the waves, cold sand under me. Midnight moving slow, nothing needs to speak. Moonlight,
All right, guys. Potential long forming.
stars falling low. Some nights feel bigger.
Let's just see how this candle closes. Nope. Nothing yet.
Dark blue horizon, no sound but the wind. Time feels different out here again. I look at the sky, then back at the sea. Funny how small things can set you free. Water, pull me close. Slow motion, lose control. Water, stay with me. Out where dreams
All right. Potential long.
touch the sea.
All right. I'm entering long.
Order filled.
Take profit 28,355.
Velvet rain on the glass, red lights drifting past. slow. Smoke under the coat. People come and fade like waves in the dark. Funny how the city feels softer tonight. Velvet rain fall on me. Stay a while, stay with me. Velvet rain,
All right, she's approaching. Take profit.
slow it down, move real slow. Taxi lights in blue slide across your face. For a second there, time just walked away.
Okay, next trade.
Some nights ask for nothing, just a place to breathe, just a little silence under city dreams. Velvet rain fall on me. Stay a while, stay with me. Velvet rain, don't let go. Slow it down, move real slow.
Looks like we're getting some more volume to the downside. Potentially change of fair value coming. Just depends if it gives us some volume around here. And the reason why I changed this, because let's say in this example, it looks like we're getting some volume. If the market goes above this fair value, I'll be looking for shorts back to the fair value. Because if we still have it up here and you're not changing the fair value of the market, what's going to happen is you're going to be going long in a market where you should be going short, if that makes sense. So whenever you see some push off like this, the fair value starts to adjust from when the market opens. So that is how we use this strategy, and that is what we're looking for. What is the price people are willing to pay for the NASDAQ? That's essentially how you have to ask yourself.
Windows down, all night in. Your hair moves, I just stare. City lights far behind. No one talks, we just drive. Stay with me, don't say much, just this road, just us. One more mile, one more sky, keep going all night.
Okay, I'm going long.
Order filled.
Take profit 28,310. Stop loss 28,247. All right, we're out.
Order filled.
And that's just kind of the name of the game of this strategy. You just got to keep throwing darts at this. And when you get the payouts from the accounts, that's when this strategy pays off. I wouldn't recommend trading this strategy on a live account because the math doesn't make sense for this kind of strategy. So you definitely have to use a prop firm for this strategy. All right, potentially going long. Nope. Yeah, that's a crazy wick. That's some strong rejection right there, boys and girls. All right, guys, I'm potentially going long again. Yeah, no, still not yet. That rejection is still there. Nope, not yet. Not yet. Oh. Yeah, I'm going to be live streaming more, David. Yeah, yo, this market is tanking. Yo, good morning. Yeah, we're getting some massive volume, guys. Well, I'm not trading against the trend. What I'm doing is I'm trading back to, I'm trying to decipher what the fair value of NQ is. So as the market is trending down, I am adjusting the value of NQ. So I am bearish right now. And all we're doing is we're adjusting the fair value, and then we're looking for longs back to the fair value. What that means is as I start to see some strong volume, I adjust what I believe is the fair value of this market. So we go back to the most recent consolidation, usually right after a breakout. So I would say the fair value of NQ is right around here right now. So price will always come back to the fair value. And then if the market breaks back above, I'm going to be looking for a reversion to the downside. So I will be shorting. So essentially I am looking for shorts if market is in an unfair value. So that's kind of how you look at this strategy. Because even though the market is trending down, there's still a fair value that people are willing to pay for the NQ. So even though everyone is bearish on it, it could still push a little too far from what the value of it actually is. So we look for that point of consolidation after the breakout of volume, and that is where I tend to look for the fair value of this trade. So right now, market is breaking out. I think the fair value right now is 28,232. So I will be looking to go back to that fair value. We're still bearish because the market opened over here. So we're still bearish as hell. We're now no longer looking at 28,500 as the value of NQ. We are looking at a much, much lower price. So I essentially will be looking for that push back to the fair value. So I think that the value of NQ is bearish at 28,232, if that makes sense, David. Because, for example, market could push back up above here and consolidate. I will be bearish. I will be looking for shorts back down to this area. Does that make sense? Because this is what I believe the fair value of NQ is. Because think about it. If market is selling off, a lot of people are going to panic sell, and they're going to maybe make an unfair decision on the price. So they're going to be pushing price to an unfair value. I do believe that the market is bearish, but I do believe that there's unfair values in a bearish market or bullish market. So we're looking for the fair value. Price will always revert back to the fair value. But we need to see confirmation. So I need to see a displacement in price to push back to that fair value. And if you trade this strategy over the course of a week, you will come to find out past evaluations, paid out payouts, and you get paid from these prop firms. That's how we milk these prop firms, baby. Using a 1 to 1.5 risk reward ratio is super key. Remember, a lot of this market is being pushed by earnings reports coming out too. So a lot of people are anticipating that these tech giants are going to miss their earnings or their cash flow. Quick profits are major in these new markets, man. Shit reverses so quick you're to go back in your direction. I agree, man. Unless you're trading long term on the S&P 500 and just buying and holding for a year, I agree. I think that trying to intraday trade from the market open is kind of, you know, it's kind of pointless. She's still dropping. So how to look at this right now is, even though that the market is pushing down, there's still a fair value somewhere along this price drop, right? So think of it like this. Think about a needle that's dropping. Yes, it's dropping, but sometimes it may drop a little too far past what it should be worth. So that's kind of what's happening right now. Because what pushes price past unfair value or pushes price to an unfair value is emotions, excitement, greed. All of these things factor in. So yes, we can still be bearish, which we are right now, but there's still a fair value for NQ. So potentially, if this candle closes bullish, I could potentially look for a long right now. We could get a nice little trade back to this 28,232. Let's just see how this candle closes. If market wants to revert back to fair value, let's see. We have 30 minutes until 11 a.m. and then we're going to stop. Bullish or bearish? So are you trading off of fair value with the risk? Yeah, I am. That's exactly right, East Lax. The key to this strategy is understanding how to take a discretionary bias and understanding what the fair value is after the market opens. Because usually the fair value is right around where the market opens. Because after market open, you got news, you got orders coming in, you got all these things that will make the price push away from the open or push down from the open, right? So usually the open is where the market deems where they want to trade NQ. The only time that the fair value changes is if news comes out. If news comes out, then that is what's going to affect the fair value. So what's affecting the fair value right now is going to be the earnings for these major companies this week. So that's kind of what's adjusting the fair value after the market has opened. So I'm just looking for a displacement right now. Because the fair value will always act like a magnet for price. So, you know, market drops a lot and then market recovers a bit and then market closes and then this would be the new fair value. So we're always looking for reversions back to the fair value. But until we get a displacement, I'm not touching this shit. We're still watching. Now, if we get some volume right here, the fair value, I'm about to adjust it again. If we get another drop from this level right here, I'm going to adjust it to where the market consolidates. But I need to see some volume off of this price push. No, fair value is based where the market is opening. And then from there, whenever there's volume pushing off of a certain support or resistance is the next fair value. So I'll go more into this. I have a whole course around this. So I'm gonna be teaching this, because how I used to trade on live funds is not how I would not trade this strategy with a live account. This is only for prop firms. And now, and myself as a live trader, now transitioning to prop firms. I mean, the highest payout I've ever made on a prop firm was $24,000 in one payout. So that was my biggest payout. All right, guys, it looks like we got a new fair value. I'm gonna go ahead and adjust my fair value to right around here. So now I need to see the price push off even further to even look for a mean reversion. So again, the beauty about changing the fair value is now, if price comes back above here, I'm going to be looking for shorts to this area. So I'm not trading against the trend. I'm just trading towards the fair value. So whether price is below the fair value, I'm going to be looking for longs. If price goes above fair value, hell yeah, I'm going to be looking for shorts. So now I'm not taking this long or anything because I need price to break above. I can't do anything with this because I have no room to trade back to the fair value. So now I'm just kind of waiting because we did get some rejection though. Yeah, no, it's nope, that shit's still pushing off. But yeah, you keep trading like this on your props, guys. You keep rinse and repeat, rinse and repeat. You guys are going to start getting payouts. It's a formula, honestly. Yeah, that's crazy. Still doing nothing yet. All right, guys. See, I really can't. So, for example, if this closes bullish, I would say I want to go long. But because it's already so close to the fair value, it's just like I can't see. Like, if we were to enter after this candle closes here, I can't justify it because then I'm expecting price to go back into an unfair value, and I don't want to be in that unfair value. I want to be trading towards that fair value. So because it's so close to the fair value, I can't do anything on the long. Yep. Damn. Yeah, I can't do anything with that. So now I want to see price break back above and then look for shorts. So yeah, I'm not doing anything with this right now. Still sitting on our hands. And usually after 11 a.m. Eastern time, the edge stops to work as well. So that's why we stopped trading after 11. But do you guys see what I'm talking about? You see how the price comes back to the fair value? That's usually the ultimate rule of this strategy, is trading back to that fair value. So price is going to be coming back always to the fair value. You know, so then if it goes above the fair value, so making it unfair, we're going to be looking for a price to naturally come back down. And if it goes back below, price to naturally come back up. If it goes back above, to come back below. Do you guys see what I'm saying? So this is kind of what... Oh, shit. This is kind of what we're doing. That volume, oh my God. That is crazy. Shit is tanking. All right, so in this situation, again, we're looking to potentially adjust the fair value. I would probably say the fair value is right around here now. Yep. GG. GG's in the chat, guys. That shit is tanking. Oh my God. We got about 20 minutes left of the session, and then we're going to be done for the day. So, why is it so important to adjust the fair value? Because whenever there's a massive push of price, and after some consolidation, like where it bounces and wicks, that's kind of where I put my next fair value. I want to see price may potentially come back above here, so that way I can short it back to the fair value. If you can correctly guess the fair value, you'll know where the market is going all the time. So long as it fits in the strategy. So in this example, what the fuck? Right, so potentially I would want to enter, you know, somewhere around here for price to come back above here. But I need to see a displacement first. So again, we're not taking a long back to fair value until I see a displacement. So we need to see an engulfing candle with some momentum, and that is when we're going to take the trade. The reason why I didn't enter this trade, because it closed below this wick. That's why I didn't enter this long. And now if this closes above all of these, I won't enter because it's too close to the fair value. Do you guys understand now? Personally, I would like to see it go above the fair value so that way we can look for shorts so we would trade the trend. But look at that. God damn, look at that rejection. That is why we don't take the trade. But you guys can see price was attracted towards our fair value. So even though we're bearish, if this is the fair value, we're gonna see some movements towards that fair value. Maybe back up, down, up, down, up. It may go down even lower, making this the new fair value, and then we just continue to, you know, come back to the fair value. So again, just gotta understand how fair value theory works. There you go. Market's coming back to the fair value, where people are willing to trade the NASDAQ. What price is the NASDAQ worth? That's essentially what you have to understand. There you go. Price just came back to the fair value. So now, if price goes above this level, we're in an unfair value. We're going to want to trade back to the fair value, which would be shorting.
Silver on the waves, cold sand under me. Midnight moving slow, nothing needs to speak. Moonlight on the tide, stars falling low. Some nights feel bigger than the world we know. Moon water, pull me close. Slow motion, lose control.
All right, price is pushing away from the fair value.
Stay with me, out where dreams touch the sea.
So potentially look for some shorts. Same risk reward ratio, 1 to 1.5 risk reward ratio. So, but we need to see price push away and then get a displacement.
Dark blue horizon, no sound but the wind. Time feels different out here again. I look at the sky, then back at the sea. Funny how small things can set you free. Moon water, pull me close. Slow motion, lose control. Moon water, stay with me. Out where dreams touch the sea.
Yeah, so I would need to see price push away a little bit more for me to look for a sell, simply because I want to be trading back towards that fair value. So I would be looking for entries around 28,047, but that would need to mean that the price would, you know, push up a little bit more and then we get some sort of displacement, and then I would, you know, look for a sell. So until then, we're just going to have to wait.
Smoke under the coat. People come and fade like waves in the dark
Okay, we're getting some territory for us to sell.
of the city. Feels softer tonight. Velvet rain fall on me. Stay a while. Stay with me. Velvet rain. Don't let go. Slow it down. Move real slow.
All right. So we're definitely in unfair value territory right now, guys.
Taxi lights in blue slide across your face. For a second there, time just walked away. Some nights ask for nothing, just a place to breathe, just a little silence under city dreams. Velvet rain fall on me. Stay a while. Stay with
All right, we got about 10 minutes left. We might have time for about one more trade, and then after that, we're done for the day.
don't let go. Slow it down.
Just need to see some displacement, honestly.
Slow.
All right, if this candle closes below this candle, we're going to be looking for some shorts.
Last train passing by. Street lights getting low. Still your shadow
She's ripping.
with me.
Windows down, warm night air. Your hair moves, I just stare. City lights far behind. No one talks, we just drive. Stay with me, don't say much, just this road, just us. One more mile, one more sky.
You know what it's looking like, guys? It's looking like 28,232 might be the fair value, because honestly, this was a much more bigger volume push than this one. So I think market's coming back to this fair value because there's more. The reason why I'm saying that, because there's more consolidation. I got more wicks, I got more ticks, and so really, we could have been going long this entire time and we would have made some fucking money. But it's all good. That's what it seems like to me right now. So I'm not even gonna look for shorts because the fair value, I believe, is 28,232. You just have to base it off by how much volume it pushes off and how much wicks. So we only really have 1, 2 here. So the fair value really is up here. But you guys can see how the strategy works, right? If you would have traded back to the fair value after we get some displacement, you could have been going long and you would have been making money. So for example, right, as soon as we had this close above here, right, you would have been hitting take profit. And then what I like to do is if we get more displacement, I would have stacked on some more. I would have entered again right here. I would have entered again right here. So that's 2 trades right there. We could have smacked on those, honestly. Just got to understand how the fair value theory works, guys. That's really it. But all right, guys, it's 10:58. Market's about to be at 11 a.m. and I'm going to go ahead and sign off. But you guys can see how the strategy works. We'll come back tomorrow and we'll do the same thing again. Rinse and repeat, baby. All right. Thank you all for hopping on and appreciate every single one of you. And I will see y'all tomorrow. Peace.